Hello, my name is Steve Bigelow with the Candlestick Forum. The market is still heading lower based upon our sell signal that we saw in the Dow last week. Join us tonight. We are going to be doing a session where everybody is welcome to show the indicators that are predominant in candlestick analysis that allows you to get in or anticipate when a trend reversal of a price is about to occur. There's 5 different indicators that the candlestick graphics illustrate to show us when it's time to take profits. So last week, as we saw, a gap up in the overbought condition followed by a bearish engulfing signal that closed below the T-line told us we were in a downtrend, probably heading for the next likely target. That was also illustrated last week with the hanging man that we saw in the NASDAQ with a lower open gap down. Very simple rule. Hanging man / doji, simple rule. If it opens lower, the Japanese race traders tell us that's an extremely high probability a reversal has occurred. The fact that it closed below the T-line puts us in the T-line rule, which is you're in a downtrend as long as they can't close back up above the T-line. However, note where the NASDAQ finished up today. Did an inverted hammer right on the 50-day moving average. That might provide some support. However, knowing the stochastics are heading down, it may take a few days of waffling down here for investor sentiment to get some confidence back. So the patterns are what we're still using and using very effectively. Last week, when we identified the fry pan bottom in Tupperware, look what it's done in the last 3 days when the market was heading lower. This is one of the benefits of candlestick analysis patterns, that not only do they tell you the direction and give you probabilities of a high magnitude move, that when the market turns against you, the fact that there's a lot of investor sentiment buildup, they won't back off as predominantly as other stocks that aren't trading in a pattern. Signals like we saw last week where home did a kicker signal to the downside. The kicker signal is usually a very strong signal with a probability that it's heading for the 50-day moving average. But notice that we've done a doji and an inverted hammer doji getting toward the oversold area. Even though we're not there yet, we at least want to be aware that there might be some buying right here at the 34. So it allows us to have a game plan. If it opens positive tomorrow and starts trading positive, we'll probably cover our short position. If it opens lower, remember the doji rule. It's going to move in the direction how they open after a doji. More than likely, they're heading down here for this support level at the 50. This allows an investor to have a game plan on every trade setup. We saw the same scenario on Apple. A bearish left-right combo, a gap down below the T-line, more than likely still heading down here to the 50-day moving average. There's no buy signals. If they do open this positive tomorrow, you have to watch now to maybe cover short positions or look for at least a bounce. The stochastic still heading down makes the probabilities of heading toward the 50-day moving average still very viable. As long as the NASDAQ is sitting down here, that might be the first signs of any place where they're going to support the market. However, it'll still be very important to see how they open and how they trade the market tomorrow. Even though we're sitting on a support level with a potential reversal signal, it still needs bullish confirmation. That'll be it. Join us tonight. We are going through a session on how to identify when to take profits, even though you might not have a candlestick reversal signal that has been fully formed or a close below the T-line. With that, we'll see you in the chat rooms.